Alastair.
Okay.
The floor is yours.
Okay, well, thanks very much for everyone attending. My name's Alastair Caithness. The company I'm speaking about is Ziyen. So the first thing I want to speak about is the US domestic oil market. So currently the US actually imports just over 10 million barrels of oil a day. So that's $640 million a day that leaves the US economy. Over the year, the US actually imports nearly $240 billion of oil. So this is obviously taxation money that's missed out on, and the potential marketplace that Ziyen's going into can show you how big an opportunity for Ziyen is. And then obviously the key thing with us as well is, how much oil does America actually need to import? And currently at Ziyen, we believe you actually have to import zero oil. You've got all the reserves here in America. So we're looking at the opportunity for Ziyen in the local market. So, how many oil leases are available for Ziyen in this market? So there's over 300,000 oil leases. So the oil and gas market in America is unlike any other market in the world because it's very fragmented. Therefore, if you're going out to the Middle East or going out into places like the Gulf of Mexico, North Sea, the big oil companies just have the one agreement with a government in order to produce oil. But in America, what actually has to happen is every single company that operates has to have an agreement with the local farmer. And it's this agreement with the local farmer or landowner which is the opportunity that's created for Ziyen. Because ultimately what's happened is in all these older basins in America, the big oil companies can't get economies of scale. Therefore, that's one of the reasons why they no longer operate there anymore. So if you look at the cost to produce oil in America as well, currently it's at $36 a barrel, but we believe that with our Ziyen Advantage model, we can actually get production down to less than $20 a barrel, which is obviously more money than it costs to produce the oil in Saudi Arabia. But if we can produce oil for $15, $16 a barrel, if the oil price is at 70, 60, 50, even at $40 a barrel, Ziyen can still be a very competitive company and we can still make a large income from our business. So people will ask us, how do we actually take the oil to market? But essentially what happens is, it's actually all we're doing is producing the oil and putting it in storage facilities, because all the oil that's actually produced in America is actually consumed in America. So essentially what we're doing at Ziyen is we're actually just producing oil, putting it in storage facilities, and then the refining companies take it from there. So actually the ease of us actually getting involved in this marketplace is very easy, because ultimately all we have to do is produce and store the oil, and the refining companies take it from there. So the Illinois basin where we are targeting our first leases and where we're looking to operate, essentially the refining companies there will pick most of the oil up by truck, but there'll be pipelines that take the oil in. So all the oil that you bring in from Canada on a daily basis is all piped in from pipelines, whereby these smaller basins are all picked up by trucks. So we look at the strategy of Ziyen. So essentially we are entering a marketplace whereby we're looking to replicate a strategy that's already worked multiple times in the oil and gas industry. So we're looking at the North Sea. So I'm originally from Scotland, that's where my accent's from. And if you look at somewhere like Scotland, whereby the North Sea is where they drill deepest in the world for oil, there's massive oil and gas platforms, and companies like Apache, Talisman and Taka have all entered these markets where they've purchased old oil rigs from the likes of BP and Shell. Now BP and Shell used to have huge oil rigs that were producing over 150,000 barrels a day. Now some of these rigs like the Eider and Tern are now producing 30, 40,000 barrels a day. So what BP and Shell do is they divest the assets to smaller operators, but it's still highly profitable, but not what Shell and BP are looking to get out of it. So essentially what we're looking to do at Ziyen is we're looking to implement a similar style strategy, but going into the older basins across America. So it's not like we're actually doing something for the first time. So what are we looking to do? Basically we're looking to exploit a very inefficient marketplace. So the Illinois basin where we've acquired our first 13 oil assets, essentially the way they produce oil now is the same way they produced oil 30 years ago. So what we're looking to do is go in there and acquire the assets at an advantageous price. So basically, as cheap as possible, we are looking to acquire these assets off the farmers or the landowners or the small operators that are there. And then we're looking to implement our Ziyen advantage, which I'll shortly speak about, where we're looking to increase production and improve cost efficiencies. And ultimately from there is, what we're looking to do is, we're looking to get a return in the first 3 to 5 years from these producing assets. So essentially what Ziyen is, it's a startup oil and gas energy company. So we can't have the same strategy as the likes of ExxonMobil, BP or Shell, whereby they've got huge amounts of money in terms of billions of dollars they can do in capex spend. What we're going to do at Ziyen is, we're going to go there, acquire their assets for the cheapest amount of money we can pay, implement our technology to increase production, and then essentially we'll make money in the first 3 to 5 years and make the company highly profitable. Now you're saying, well, how many opportunities are there in America for a company like ours? And I'm telling you, there's thousands of opportunities. They call them these stripper wells, these small mom and pops operators that have been operating in these basins for the last 30 years. And what we're going in is to acquire these assets and then apply our technology, and essentially we'll move into profit from day one. So the Illinois Basin is where we've acquired our first oil asset. So it's just over a year since we acquired our first asset. So the asset itself has petroleum reserve reports with over $36 million in it. So when you start looking at the opportunity for a small startup company going in there, over the last year, we've acquired 13 assets. We're about to acquire our biggest asset next week. So essentially, we're building up a stockpile of potential drilling opportunities, but also oil reserves. So the Illinois Basin, if you look at it, it's only producing 33,000 barrels a day. Even in its heyday back in 1910, it was producing 90,000 barrels a day. And that was when the likes of ExxonMobil or Texaco and Mobil were all operating on these leases, and they were only drilling to 500 feet. So where do we go after that? Well, you start looking at a place like Oklahoma, where the strategy is still able for our company to go into there. Because everyone in America, when they're producing oil and gas now, it's all the Permian Basin. So all the shale gas that's getting produced in America is all in the Permian Basin, where they produce 3 million barrels a day. So if you start to look at the numbers, you can see why the big operators don't want to touch these places. And then again, we'd look to move to Wyoming. So these would be the 3 first target markets for the company. So if we look at the assets that we've acquired, so essentially we secured our first asset last year in June of 2017. So the petroleum report shows there's 715,000 probable reserves. And basically based on the oil price at $60, we've got over $36 million worth of undeveloped reserves in our first lease. And now we've acquired 13 leases, and the next lease we're about to acquire is potentially double that. So as we acquire 13 assets in the basin, what we're looking to do is to grow the company. So our company is a Regulation A+ company that's been qualified. Initially, we were qualified as a company that provided information on oil and gas contracts, but then we diversified to actually go after oil contracts ourselves. So we're now in round 2 of funding. We've got a share price of $1.50 that's been qualified by the SEC, and our target is to list on the NASDAQ small caps market in 2019. Again, you can also see that where the oil prices come in. So we started acquiring oil assets based on $46 a barrel. So we actually got in when the market bottomed out, and this allowed us our opportunity to start to acquire oil assets. It's basically about moving into production. So the company itself, when we got our last SEC qualified offering, the valuation of the assets we owned was $2.8 million based on just the lease acquisitions. So what we're looking at now is this opportunity to see huge uplift in terms of valuation of the company. So at the moment, our company is classified at the SEC under the classification 7473, which is Data Information Company. It's essentially what the SEC put companies under, whereby if they're an internet-based company or they don't have a classification for them, this is where they list them. So once our company actually moves into production, the big advantage of what's about to happen is we're going to be able to value the company based on oil reserves. So I would say we've got anywhere between $100 to $150 million worth of oil reserves in the company already across the 13 assets we've got. Now, obviously, the SEC have strict rules on what reserve reports you can actually put through over that period in terms of what they think you can produce in the next 3 years. But ultimately, what you're about to see is a valuation of our company of $2.8 million, probably going to be jumping up to at least $20, $25 million when we refile at a higher share price. So this is essentially seeing the valuation and how the company's actually going to grow. The other key advantage about us moving into production is it's not only going to start to bring in revenue to the company based on these leases, but it also allows us to test our Ziyen Advantage model.
So your $2.8 million was at $1.50?
So the share price was originally 25 cents, and that was based on just being an information-based company. So when we acquired our first oil asset, the valuation was $1.50 based on that. Now we've acquired 13 assets, and that was only based on the lease acquisition. Now we're actually going to start to go into production, and by changing our SIC code to Oil and Gas Extraction Company. So we'll be moving to a small list of companies, the likes of ExxonMobil, ConocoPhillips. So once we actually move into production and change our SIC code, suddenly the valuation of the company's about to skyrocket.
So notionally your share count won't change, but your valuation is going to go 2.8 million to 28 million.
Yeah. Technically, that's what's about to happen in the company. And then we're going to have an aggressive strategy of acquiring more and more leases, not only for drilling activity, but also to move into production. So the asset value is going to grow of the company very quickly. Because if you look at the Illinois Basin, there's not actually one listed company in the Illinois Basin. Every single company there is an LLC. So all these companies actually care about is profitability. So Ziyen, being the first listed stock exchange company in the Illinois Basin, or the latest company, essentially all the reserve reports which can add to assets of our company is going to be key. So we're going to grow very quickly because the oil and gas industry is so large. So barriers to entry are difficult, but once we actually move into it, what you're going to see is a huge valuation jump for the company. So I'll quickly go over the Ziyen Advantage program itself. So if we look at, why is a company like ours focusing on oil when everything's about green energy and renewable energy? But ultimately, in addition to all the oil that's actually used to generate for electricity and add to the grid, you start to look at the amount of products that actually oil is involved in creating. So, people just, from the green energy point of view, they don't hate oil when they pick up their iPhone or they use their iPad. They hate oil when they actually see you going into Native American lands for drilling or going into the North Pole and areas like that. But ultimately, oil's not about to disappear. And then essentially, it's just going to continue to grow for the foreseeable future. So this is where we see the big advantage for our product and where we're looking to do, because what we want to be involved in is the transition of energy. So if you look at the three key advantages of what we're trying to do with Ziyen Advantage, ultimately we're looking to drive down the extraction costs. So what we're actually going to be doing is we're going to be using renewable energy infrastructure, solar and wind, to actually generate the electricity to power the pump jack or the nodding donkey that moves up and down that you see in the fields. So basically over 95% of these nodding donkeys, which there are over 400,000 of them in America right now, they're all connected to the grid. So you actually have to pool electricity to actually power them. So once you strike oil, one of the biggest costs is electricity to power the pump jack. So if we can actually generate the electricity ourselves using renewable energy infrastructure, we'll be able to push down the oil extraction costs, which is the first key benefit. So we're not going into renewable energy just to be green, we're actually going into renewable energy so we can produce oil at a cheaper rate. The other thing we're looking to do is maximize well time. So ultimately in these areas in the basin, they're producing oil the same way they've produced it 30 years ago. The technology's not moved on. They operate on a shoestring, and that's the ability for them to keep producing oil. Now, they call them Mam and Pap's oil companies, but they're Mam and Pap's oil companies that have a few stripper wells that make $15 million a year, and there's maybe 3 or 4 people in the company. So from being a small company perspective, it's a good business, but compared to ExxonMobil, who make over $500 billion a year, it puts it into perspective. But it doesn't mean that it's not a profitable business that we're entering. And everything we're doing is all about increasing efficiency operations and maximising uptime in order to us to push down the extraction costs. So how do we actually do this? So essentially what the Ziyen Advantage program is, so I spoke about it earlier, we're going to be using solar and wind to power the pump jack, essentially to push down the oil extraction costs. The other advantage that we're looking to do is get involved in this transition of energy, because the farmers who actually own the land, so we actually just own the mineral rights, so the farmer still owns the land, and he gets on average 12.5%, an eighth of all production in the basin. So this is why he wants you to drill oil on his land, because he makes more money from the oil than he does from farming. But in the end of the day, the land always returns back to the farmer. So if we can get involved in this transition of energy, whereby not only are we using renewable energy to push down oil production costs, but then we're actually creating infrastructure to either sell electricity back onto the grid, or alternatively, what we're about to do is work with a farmer, and if he wants to start to switch to electrical combine harvesters, or all types of electrical tractors, or anything else he wants to do with electricity, we'll have actually put the infrastructure in place to do this. Basically, the other thing we're looking to do is just completely modernise the way they're operating. So the people I've brought into the company are experts in likes of Shell, BP, Total, etc. So they've worked in huge projects all over the world. There's no research and development budget going into these areas because it's only the big companies that use research and development, not the small companies. So essentially what we're looking to do is take technologies being developed in other places in the world and bring it to this basins. Again, you're looking at different types of inverter technology to basically increase pump efficiency. But what we're looking to do is we're looking to use the best renewable solar energy on the marketplace, put it in a container structure, and it'll all be using sort of backup battery storage in terms of the energy we capture during the day will power the pump jack at night as well. So it's allowing us to not only capture electricity, but generate electricity as well. Now, this is actually where the sphere of where I'd like to see the company go, because we're using oil and gas to basically fund the renewable energy part of our business, where most renewable energy businesses don't make profit until year 8. And obviously, we're leveraging hundreds of years of experience across the team. So this comes to the next thing. What we're looking to do is, it's this ability to actually tap into government tax credits. So the government actually uses a tax credit to encourage companies to invest into renewable energy. So what happened is the Treasury used to give away checks. So if you spent $1 million in renewable energy infrastructure, they would cut you a check at the end of the year for $300,000. The Treasury ended up getting sort of fed up of actually cutting checks. So therefore, the renewable energy companies were unable to make profit till year 5, 6, 7, 8. Then when they invest in renewable energy infrastructure, they're not getting a check back, so they get a tax credit. So essentially what you're looking at there is, these are the partners of companies they've had to bring in there and use the profits from these companies in order to pay for the renewable energy infrastructure. Essentially what we're trying to do at Ziyen is to do the whole thing in one balance sheet. So how does it actually work? Well, essentially we're reinventing how an oil and energy company is actually valued. So from day one, we're actually making profits from oil and gas. We're actually investing in renewable energy infrastructure. This renewable energy infrastructure will get tax credits. So we'll actually get a tax credit write-off for actually investing in renewable energy infrastructure. It reduces the oil cost, and then we're going to reinvest in renewable energy. So, even our plans over the next 5 years, our company's looking to build up to 30,000 barrels a day, which would give us a turnover of somewhere in the next $400 to $500 million based on an oil price of $60. But ultimately, over the next 10 years, I can see us investing in excess of $1 billion in renewable energy infrastructure across thousands of leases in the Midwest and these other basins. So what you'll start to see is Ziyen not only as an operator going into these basins, but essentially what you're going to see is Ziyen actually becoming an energy company as well, and a leading renewable energy company. So just going to quickly go through the management team of what we put together with the company. So, ultimately it's myself here that set the company up. Recently, Dean Holter's joined the board of directors. So Dean's involved in IDO Capital. He's actually sitting on a panel today with Montel Williams for the cannabis section of the business. But ultimately, Dean's worked with companies like the UN, the Clinton Foundation. He's been involved in multiple operations of working with small companies like ours and essentially getting us market ready. So in the last 6 months, our company's basically been funded from the crowd. We've got over 320 investors, raised just under $700,000. What Dean's doing now is he's getting the company not only market ready, but also the ability to take in institutional investment money. These are our two key oil guys that have come into the business itself. Shane Fraser's been involved with me from early stages of the business. So, Shane was involved in running a platform for Shell out in the North Sea that was producing 150,000 barrels a day. So when I say our growth of our company is going to be 30,000 barrels in 5 years, you can just see the sort of size that we're looking to go to. So when you actually compare Ziyen to the big operators, we're still going to be very small, but we're moving to highly profitable business. Chris Knox is a supply chain specialist. He's actually based out in Qatar right now, working on the biggest gas project in the world with the Qatari government and Total. Next up's Mingus, who's actually filming in the back. So Mingus has actually been developing our brand, makes a lot of videos for us. He's getting us market ready, sets up his own company that does a consultancy business that works with startup companies that provides branding and marketing strategies. Dave Rogers has been involved in the company as well in the past. Again, it's someone else who's got an engineering background and can assist with that. The other key people were brought on recently as well. Alan Lieb he actually set the business. He was involved with me from the beginning of the business, and I brought him in, involved his dealings with government. He's been an ex-US Navy SEAL. And then our investment professional is Josh Berg's company, who's involved in the biomed, the healthcare sector, and he's also moving into the energy sector as well. So what I'm doing with the company is I'm taking it to the next stage. So I'm bringing in guys like Josh Berg and Dean Holter to basically take the company onto the markets. Someone told me that last presentation, this is probably the most boring slide you've ever seen. But ultimately, from my perspective, it's an interesting slide to show what the company is and where we're going. See, the company's basically only got 75 million shares. I set the company up with a goal to have an exit strategy back. We're going to take the company onto the markets. So, it's a Regulation A company. There's been 9 Regulation A companies gone on to the biggest exchanges. I think in the next 18 months, Ziyen will be the biggest Regulation A plus company to hit the markets. Not only because the type of company it is, because we're going into an industry sector whereby the barriers to entry are difficult to get into, but once you're actually in it, like I've proven today, our company's going to grow very fast. And, even if we only go to 30,000 barrels, we'll still have a turnover of $500 million. But ultimately, I see us growing faster than that as well. If you look at shares outstanding in the company, essentially we're just under 32 million. So, and most of that is held by the trusted ownership and the founders of the company. But realistically, the questions that were asked earlier was, our company was qualified with SEC at a share price of $1.50 based on us actually having an asset of $2.8 million. Now, this $2.8 million was based on lease acquisitions. Once we actually move into production, the valuation of the company will jump up to somewhere around about between $20 and $30 million. I see us IPOing 2019 with assets of in excess of $100 million. The final thing I want to briefly speak about is, Autism Speaks. So, my son's autistic. So this year I'm the chairman of Autism Speaks walk in San Diego. So every time I go and do presentations, and I've done different investors' pitches in Scotland and across America, I just want to speak a little bit about this, because obviously everyone in the room knows somebody who's actually autistic. So people get very worried about the rates and the increase in the amount of people who are actually getting tested as being in the autism spectrum. So at the moment it's actually 1 in 59, which is 1.7% of the population. But ultimately, the worrying rates for someone like me who's involved in this is a recent study showed that 1 in 5 homeless people in LA right now are actually on the spectrum. So therefore, that's 20% of homeless people. So when you actually see a homeless person in LA, you think it's some sort of drug or drink problem that's created it, but it's actually they're struggling from neurological and mental health problems. And if you start looking at other studies that are coming into this as well, you know, a recent study with the homeless population in the UK, you know, you can see up to 6,000% higher autistic people will end up homeless than the general population. This is just me speaking about my role as the CEO of the company, but also I'm actually chairman of the San Diego Autism Speaks walk, so I'm a global ambassador for the charity, and I do a lot of sort of TV work pushing the essentially public awareness and promoting understanding of the autism spectrum. So thanks very much for your time today.